Claudine Cohen here, managing partner of Cohen Resnick's Value 360 practice. Welcome to Deal Makers Unplugged. I'm excited to have Thomas Ince, founder and managing partner of LP First Capital, as our first guest. Thomas, good to see you and welcome.
Yep. Thanks, Claudine. Thanks for having me.
So, Thomas, when I think back, in around 2018, after having gone through an entrepreneurial journey, you put on your independent sponsor hat, which, 7 years ago, the independent sponsor community looked very different to what it is today. And you decided you were going to go out there and build, I believe, the largest independent sponsor firm that was out there. So maybe you could just tell us a little bit about that journey and how you got to where you were in 2018 and what your thoughts were.
Yeah. I don't know if we're the largest, but yeah, we're probably one of the bigger ones though. But yeah, we started in 2018, and prior to that, I was an entrepreneur. I had a holding company of about 4 different businesses. The main one being an education business called Zollege, and my dream was sort of build a Berkshire Hathaway of sorts. And one of the businesses in that was a sell-side advisory firm, and I was selling businesses, and independent sponsors were buying some of the things that we're selling. And I just got really intrigued. I didn't know what the term was at the time. I just knew that they didn't have a fund and didn't have money, but it was the best offer, the best for the client that we were working with at the time. And but I had sort of a suspicion that the deal wouldn't close because I didn't know how they were going to get their money. But the deal ended up closing and got me really intrigued by the model. So I started studying it and decided to pursue it in 2018. And yeah, we focus a lot on doing different buy and build strategies, very thesis oriented. So we'll pick a thesis and work on it for a while and just develop a big pipeline there. Talk to a lot of executives, consultants, investment bankers in the space, and just go out and execute on it. So we've done different roll-ups in landscaping, collision centers, HVAC, commercial and residential, utility services. Just got into restoration. Actually closed a platform last week that you helped on, Claudine. And usually we found more success doing that than being opportunistic, looking at different deals.
And I mean, Thomas, you have over a fairly short period of time, we met in 2020 when you were looking at your landscaping deal. I think at the time you maybe had a handful of people that were really under you in LP First. Maybe it was 3 people, 4 max. But, it's unusual with an independent sponsor model, especially the new independent sponsor, to build out a robust team and infrastructure, because obviously there's a little bit of the chicken and egg, to your point, you don't have the fund. You've got to go identify, buy the business, and then you've got to have money to run an infrastructure, to monitor the portfolio and that. So, can you talk a little bit about the team, how you thought about the makeup of the team, and how you attracted people? Because today, if I'm correct, you have probably around 15 people that work within LP First.
Yep. Yeah, that's correct. Yeah, when I started, I had some executives that were at Zollege with me. We started this up, and they eventually those individuals eventually wanted to become CEOs, and so they're working in 2 of our portfolio companies right now. But I think as we close on the landscape deal, I looked at my skill sets and also weaknesses, and I really built out, because I have a more of an entrepreneurial background, and decided to sort of bring on individuals, team members, partners that really complemented my skill sets. So if I went back and doing my entrepreneurial journey prior to being an independent sponsor, a lot of the success I had was building out a well-rounded team, and eventually Zollege got to over 500 employees. So when I look back, when I was trying to do it all myself, we didn't get a lot of traction. When I built a team that was smarter and more capable than myself, I was able to achieve that. So I sort of took that same approach at LP First. And Logan, Joe, Matt, Michael, the whole team here, Io, Travis, they all really complement in different ways my skill set. Some have more of an operating background, some have more of a traditional private equity background, but that combination really helps out a lot.
Yeah, and it's interesting. So your entrepreneurial background obviously helped you as you thought about what kind of people you needed and who, was going to help you get through this, because you've obviously got your strengths. And I think when I do look at your team, it's a really good mix of people. To your point, you've got some seasoned private equity professionals, but you've got some very young individuals who maybe come out of banking background. You've got some of the operators slash CEOs, COOs. So it's really worked well. And just day to day, when you look at the infrastructure of LP First, how many portfolio companies do you currently have? I think what?
As of last week, we just went up to 13 active, and
Cool.
we've done about 69 total acquisitions thus far.
Which is just unbelievable. 5 years down the line to have been able to achieve that with this team. Have you been able, or have you professionalized the business to some degree and put in some more infrastructure around KPIs, measurement, and kind of just thought about LP First no longer as the scrappy independent sponsor, but now, for all intents and purposes, you're like any private equity fund?
Yeah, I think the model is scalable. I can see one day we look at some other GPs out there that we track, and they do 40, 50 deals a year. Some do 175 that we track, and we think we could sort of scale up to that level, even being an independent sponsor. But yeah, one formula that we like a lot is A times E equals R, activity times effectiveness equals results. So we do track a lot of our activities, a lot of our outbound, the number of NDAs we sign, a number of LOIs we have sort of outstanding under, and we look at it a little bit like a funnel. But probably one of the most important metrics that we started tracking was sort of trying to quantify our value creation plan. We have something called LBS, LP Business System, and we've quantified 10 different dimensions, and then underneath that, other sub dimensions and individual categories where we rank each portfolio company on a dimension of where they are at with KPIs or defining SOPs or accountability charts or the revenue generation growth plans and margin enhancement. So we break that down, and actually right now, like, we have a team on site working on that with that platform we just acquired last week, where we're starting that process. And that's probably been the most, I think, transformative way to sort of standardize our operating playbook in the businesses that I think will help us scale more over time.
Yeah, I must say, and we have a large independent sponsor practice, as you're aware. I don't know too many independent sponsors that have around 15 people and have done 13 platform acquisitions and that level of add-on activity over 5 years. As you think to look forward to the next 5 to 10 years, and maybe 10 years is too long, what do you see for LP First, and what for you from when you started out and to where you are today and where you'd like to be? How would you define? I mean, you've got huge success now, but how would you define that legacy and success for LP First?
I think I like to look at it trying to maximize the potential of individuals on the team. I look at everyone. I want to, and also the underlying companies. So I think right now we're trying to be the best out there at building platforms for middle market companies. Like, we want to be building the 15, 30 million EBITDA platforms for that larger funds could buy and take to the next level. We want to create billion-dollar companies. So we want to take a thesis, execute on it, take it to about 15, 30 million of EBITDA, and then have that next buyer take it to maybe $1 billion valuation over time. And so that's our goal right now. I think long term we might eventually shift to more of like we look up to like Brad Jacobs, what he's done at like some of his different buy and build strategies. So we sort of want to eventually mold into that, but right now we're just really getting our track record, and we want to stamp out a lot of exits right now in that range. I also really like the independent sponsor model. We have done a lot of soul searching in the last year with some of our successes and thought about raising a fund. A lot of people reached out about that with us, but I think we're going to stay in the independent sponsor model, and we are contemplating raising a fund in the independent sponsor space. Just to help out, sort of like a sidecar type thing where it will help out independent sponsors, because we do really enjoy networking and helping out other sponsors. We think that the independent sponsor model is going to continue to grow, and we'll probably see the industry double in the next 5 years. And we have a lot of respect for some of the firms coming into the space, like Align Collaborate and Samson, that are investing in an independent sponsor model, and we think that's a really promising development in the industry.